Yeah. And what's really interesting is like, we probably still feel like we're in the beginning. So it's really interesting to then go back to the like very, very beginning and say what it is. Because I still think that same spirit applies to us today. Like it's like this dream for 100 years or this like multi-generational impact that you're trying to have. But you just execute every day. It's just like you just do something.
Yeah.
And so the idea, we did start, it's like cool. The difference between a cool idea and a great business is that people will buy it. Let's talk to people, So it's like, that's the first hurdle. Go and talk to some people. And then it was like, cool, we've got an idea for a product. We'll work, we'll start prototyping a version of it. It's like our biggest risk at the time was that people wouldn't invest. And because that was the stereotype, is that Kiwis are bad at saving and investing.
Welcome to Checks and Balances, brought to you by Partners Life. I am Michael Vincent. This is James Blair. And today we've got an extra special guest, Sonya Williams, co-founder and co-CEO of Sharesies.
Sonya, welcome to the podcast.
Kia ora, thanks for having me.
I love doing these founders episodes.
I know, they're great. Yeah.
We like this, and I feel like in New Zealand we don't celebrate enough like these cool stories. And I know you're a busy person, you've got a lot going on, so I'm really grateful you're here to talk all about yourself.
Hopefully other stuff as well.
Yeah. No, it's all about you.
No, we're starting at day one.
Yeah. So it was a cool winter's day when you were born. No, I'm joking. So maybe, if like it's just when you think about Sharesies, right? It's now been around for, is it seven years?
7 years.
And it's probably easy for a lot of people to like, they just assume, DIY investing options have been available for a while now, but it hasn't always been like that. And I remember the beta version of the Sharesies app coming out. Tell us, how did Sharesies start?
Yeah, I think you touched on like, it's cool that you shared a bit of like the environment, say pre-Sharesies, because I think that is really important. Like, because so much of what was going on out in the world is what kind of led us to Sharesies. And so if you put yourself back in 2017, it's like the headlines were all just filled with why millennials can't buy houses. And the theme of the day was smashed Avo.
Yeah. They still can't buy houses, but
yeah. But it's we hear less about smashed Avo now as being the reason. And I think, thank goodness for that. Because it's true. It's like Kiwis had relied on property as a way of building wealth, and we still have a really high property investment compared to investment in other assets. But investment in property was getting further and further out of reach for people. So if you're starting out today and you're saying, how am I going to build this big optimistic future for myself? Yeah. But the first way of, the thinking about it is out of reach. That doesn't feel like a great start. So that was what was going on kind of out in the world and environment, out in the market. And then personally, I had wanted to invest. I had earned shares working at Xero, and that kind of got me started in investing. But I wanted to do my own investing. I was like really intrigued about how I could put some money away. And I'd reached out to a few places and tried to get in, but it's what I would call like anti-marketing, where it just feels like the barriers are quite high and lots of different reasons. But a part of it could also just be back to like a feeling of belonging, of not really seeing that I was a customer or a target customer. So nothing, and that it was kind of expensive. I was looking just to start with a portion of my income. And then at the other, and I'm from a technology background. I was working in a bank. And then, so that kind of came together, and I just thought, well, what if people were starting out today, what's going to be the good news story here? How are we going to build wealth for generations to come? And then met this fantastic bunch of people, our co-founders, who were all really passionate. I just had this idea that I'd love to invest small amounts or as much as I wanted to and build my portfolio that way myself. And then we talked about the impact that could have for not only Kiwis, but globally as well. And thought that if we went out on this mission to create financial empowerment for everyone, that would be something we were all willing to kind of take some time and invest some effort. So we were from a range of different backgrounds. There's 6 of us that co-founded Sharesies together. We kind of got in a room with that loose kind of brief or an idea or a spark. But we all wanted to invest. We all wanted to make that change. And I think, so when we think about the start of Sharesies, I do think about timing being so important and how it needed to be that thing going on environmentally, that thing, that right people, right place, right time, essentially.
Yeah. It's interesting you touch on the feeling of not belonging when you're trying to Access Shares or that world previously before Sharesies. My first instance of that, what was ASB's old share?
They've still got it.
Did they?
Yeah.
I thought they
They still
sold
have
it. Oh, crazy. And I was like trying to buy, I think I was trying to sell some shares. And it was like, I was just annoying everyone at every single, and I already owned the shares. I was like, I just want to sell some for a reason. And it took me like 4 weeks and like, I don't know, 5 different people who all seemed to be quite pissed off at me for just trying to do this like one transaction. I was like, this sucks.
You got a good business model if you're treating customers like that, right?
And I call them like frowny face moments. It's like the amount of frowny face moments you'll be willing to tolerate. And I think with money, this is the interesting thing, is like we did all this research before we started, which was like how people felt about money and how they felt about investing. And one of the most interesting anecdotes or thoughts that I took away from it, or we all did, was how money is a part of everyone's lives. But whether you have money or you don't have money, most people have a really terrible relationship with it. And when you're trying to get someone to engage with something and they're already coming at it with that, then you can't hit it with more frowny. Like you've got to.
Someone's got to be encouraging at some point.
We talk about like hospitality being a real theme of what we do, and it's true because it's not just enough to provide it. You also, knowing that context, you've got to invite people in, you've got to help people see themselves, you've got to make it a great experience.
Yeah, it's a really interesting way to put it. Like the amount of times I'll talk to somebody for this first time and they will say the word embarrassed. They will go, I feel like I should know more, or I feel like I should be in a better financial position, or whatever it might be. And you're right, the service you provide around that first interaction, because if they go, I'm going to give Sharesies a go and have a bad first experience, that might not be obviously good for Sharesies, but the impact it might have on the rest of their life is a really interesting way to think about it.
Totally.
I agree.
I agree.
Sorry, that's a bit deep. I want to go back to you having this very lofty, I'm going to make such a big impact in society in New Zealand. That's great. But like, where do you start with something that big of an idea? Because a lot of the listeners out there who might have like salaried roles like you do might have something where they go, I want to do something completely different, or I want to have a big impact. But having an idea versus jumping are very different things. So how did it start in terms of, the practicalities of it all?
Yeah, and what's really interesting is like we probably still feel like we're in the beginning. So it's really interesting to then go back to the like very, very beginning and say what it is. Because I still think that same spirit applies to us today. Like it's like this dream for 100 years, or this like multi-generational impact that you're trying to have. But you just execute every day. It's just like you just do something.
Yeah.
And so the idea, we did start, it's like cool. The difference between a cool idea and a great business is that people will buy it. Let's talk to people, So it's like, that's the first hurdle. Go and talk to some people. And then it was like, cool, we've got an idea for a product. We'll work, we'll start prototyping a version of it. It's like our biggest risk at the time was that people wouldn't invest. And because that was the stereotype, is that Kiwis are bad at saving and investing. I think the dangerous thing about stereotypes is people forget that they can be changed and they just accept it. But the reality is there's so many factors of why things are, and you can actually change those. But that was the biggest hurdle. That's why people said in the early days that it wouldn't work, is that people won't do it. Yeah. So it was like the first thing that we needed to build to give something like that a crack. Our first product was just 6 exchange-traded funds that people could invest in. And you look at that now and like we're in such a different place. Like we've got a Kiwi Saver product. We're soon to be launching an insurance product. We've got a savings product. And we can now invest in over like 8,000 investments globally. But it started with 6 exchange-traded funds. And that was just around like, actually the bigger change that needed to happen there was that people could see themselves as investors, or could see investing as part of what they do. That was the biggest barrier that we had to overcome. Now it's about how do you actually grow that wealth and how do you make a real meaningful difference in your life. But back then it was just about starting and getting started, and the exchange traded funds were a great way to get in. So that's how we kind of built the product. But in the background we also then had to, we're a regulated industry, so we had to work with regulators and become regulated. We had to have an anti-money laundering program. We had to raise some capital in the business. because we knew we needed, it's expensive to start a business, and there was a lot of competitors in that space. So it's like we knew we needed to be well funded to do a good job of it.
It's interesting. Some of the way you're talking about some of these things sounds quite similar to Naomi Ballantyne, who's the founder of Partners Life, and she was talking about like I just turned up to work and I did something, and I realized I need to go and raise money, or
so you just go do it.
So you just go and do it. And the way you're describing, we just had to go and do it. So we did it.
Like, oh, what's the next hurdle? Okay, well, what do we do now? Well, we just fix it. Okay, well, how do we fix it? Ask some people, get an idea, and go do it. Yeah.
Yeah, that's pretty much how it happened. But I think I think there was a real power of the team in that, like we were from different backgrounds. So essentially for our first year, we were operating with just us.
Yeah.
And so I think that takes, we weren't paying wages, we were just giving our like blood, sweat and tears to it in the early days, trying to turn it into something that we saw was worth committing more of our time to.
Yeah. And how do you find the dynamics of working with, all 6 of you, 5 other people, trying to launch a business, and everyone has different ideas and trying to get it all to a cohesive strategy and then executing? Because, as much as James and I love each other and we spend almost every day together, we don't agree on everything, especially when it comes to business.
Yeah, and I think that's the thing. You don't have to agree. And if do you want to talk about it?
Sonya, this is about you, not about us.
Yeah. We'll talk about that later.
But I think that there is a different, like people did say this is a really big risk, especially, in the capital raising thing, because you say, relationships are one of the key reasons that businesses break down. But so when you add more people, shouldn't that equal more risk? But I think that there's also a difference between what works in a partnership, or what makes a partnership work, versus what makes a team work. And I think like to operate in a team, you have to be egoless. It's not my idea versus your idea. It's like whose idea is, feel can more people see a logic in, or more people want to back, or something like that.
Yeah, I love that.
And like I think the way that teams work, you do then spend a bit of time, like we spent time establishing our values before we even started working together, because we were a team. If we were partners, we probably might not have taken the time to do that stuff early on. And I think there's also a difference between people having complementary skills, and I think there's enough of a crossover that we have respect for each other and we can cover each other. But I think there's also like a real genuine respect of being like, holy shit, that person is so smart. And then you're like, well, if we're all thinking that, then I must be kind of smart too, because they're keeping me around. So it's just like, I think the nature of a team is you just have more confidence in each other. And I think it allows you to be braver. Well, that's for me anyway. I feel like we've really taken some really brave moves. But have I felt... I've always trusted the people around me, and I think that co-founding group is a really special relationship. And now being this long, I don't know if we all would have expected that we would have been in the business this long. And some of us are couples, like my partner was one of the co-founders, and Brooke and Layden are married. Richard and Martin were business partners. So we've all kind of come at it. Like those relationships are just really important, and I think we do spend a lot of time nurturing it. And now that extends to our broader Sharesies team, because that's the thing. It's just like teams do epic things.
And the three CEOs, like relatively unique. How does it actually work? Like, what's the framework for running the business and decision making?
Yeah, and people expect it to be quite ironed out, and but I think the thing is it works for us, I think probably because of how the business has come around and how we started, but I think it comes to like we all work quite collaboratively. We all kind of have a sense for who wants to be involved in what, or things like that. Sometimes we do like KPIs for each other, and we know that we're all driving different areas of the business, but I think we all have really good oversight, but we might be just driving things at different times. And how that comes into things for our team is that you shouldn't talk to each of us and expect the same answer. That's not a signal that this is working really well. Because we don't think the same. And that's also part of it, is like it's about the power of that collective. And I think alongside that, we've been able to build this business that has expanded globally. It's expanded into other offerings around wealth. It's now expanding into serving companies as well directly, and all doing that while also being able to have we've got families and we're people.
Lives.
People with the
We
world.
have to live,
Yeah. Is there the not expecting the same answer from each of the three of you? How do you manage the risk of confusion within the business? Because if I know I can get a certain answer that I want and you might not like that answer, how do things like that work?
And I think that's it's kind of like if you sat around a board table and your board all said the same thing. That's not an effective board.
Yep.
But you should also be able to be clear who's making the decision. We do have a fantastic leadership team who who are responsible for driving the change that we need to see in those particular areas.
Yep.
And so it's about going who's making this decision. If it's all of us and it is a 3-0 decision, we'll make sure we're aligned and give a very clear message. But if we're supporting a decision maker, then it is about getting our input and then empowering them to make that decision.
Yeah, I find that super interesting because when we, every business runs into challenges and people approach challenges different ways. And making sure that you try and come out with the best solution for the problem. Like you sort of said, if everyone sits in a room and agrees on it, that still may not be the best solution. You've got to have some challenges within people.
We talk about all the fun, the success of running a big business in New Zealand. I want to hear about the challenges. What would have been the hard things, maybe things you thought might be thought they might have been a little bit easier than they were?
Yeah, I think it's a hard one because you also part of it, just showing up every day is it's just
just doing
that's just the thing today that we need to do. But there has been some real challenges managing, the growth of a company is because you're kind of essentially building the plane as you're flying it, and it means there'll just become a point where it's everything's working until it's not. And I used to spend quite a long time feeling frustrated that things didn't feel like they were working, and now you're just that's a signal that we've just outgrown that particular thing. It's time for a new, it's it's just a moment. It's not something that's going wrong. It's just this is a signal, do something different. We might need to change how we're doing that. Let's just move on. And then there's different stages of growth, managing that, and then leading through COVID and all of that, and the personal impact of that, as well as the the impact of markets and things like that. Being a wealth platform, while there has been a lot of market volatility and managing that. So I think there's a bit of challenge in everything. Right? Yeah.
Every day
because you're
a new
trying
challenge.
to change stuff.
Yeah. How big was the team that you were managing when you went through COVID?
I think we would have been, must have been 150 at the time.
Yeah, that is tough because that's, it was such a change in it's no surprise to anyone, but in working style and relationships and how you're doing it and management. Did you guys see any long lasting changes come out of that in terms of your management style, or is it just kind of you managed through that and then clicked back into normal?
Yeah, I think that, I think it was significant enough that I feel like new normal was is overdone as a statement, but just as you said, did you flip back to normal? I do think it created a new, a new way of working where hybrid, I think we're still dealing, and as leaders, I don't know if anyone's really figured out that kind of impact of, what remote work or the possibilities around remote work can have for business, and whether teams thrive when they're all together or whether they're distributed. I think I think that's opened up that conversation and people are finding their way through it.
Yeah.
But for us, we were in office and doing lots of stuff together, always around a whiteboard. And now, it's quite common that there's not a meeting where everyone is in the same place at the same time. But part of that has also been a global team.
Yeah.
We've got an office in Sydney. I'm moving there on Monday, actually.
Oh,
for a few
right.
months.
Okay. Oh, okay. Sorry.
When you said
definitely. I was like, damn, okay.
When you said you had a flight to catch this afternoon,
Yeah.
I thought you were going back to Wellington.
Yeah.
I'm going to Wellington first.
Yeah.
But yeah.
That's another Kiwi moving to Australia.
For a bit,
Yeah.
to support. We've got a great team over there, and it's and similar problems to like what we see here, you know, around engagement into
What is it like?
investing.
What is it like the New Zealand market and growing Sharesies in New Zealand versus growing Sharesies in Australia?
Yeah, and I do wonder if
God, you sound so
timing.
Australian when you say Australian.
Swimming pool.
Yeah.
I think timing plays a big part. Like when I talk about the timing of what was going on here versus the timing of what was going on when we launched in Australia, it's like we essentially launched in Australia and then COVID happened. And so it was just such a different environment. And I think subtle differences in, you know, the way that ideas can distribute within New Zealand, like quite easily around people, you know, we just all know each other. So I think, you know, we were able to, it felt like we went from like no one really knowing our name to now, like, I think it's very, I used to introduce and say like what Sharesies is, I am at Sharesies, and people are like, oh yeah, we know, you know, like, and I don't mean that to sound, like I think it just surprised, have been someone that's worked in like marketing for years or worked in product and tech for years. It's like having that moment for some brands would just like take decades and decades. So I think that genuinely surprised me. I think Australia, similar problems that exist. I think there's more competition, but not someone who's kind of broken through yet significantly and really addressing that problem around how people are going to grow their wealth.
Yeah, it's definitely a more mature market in terms of the, you know, financial advisors and financial advice, and I'd say people thinking about their finances. I mean, that kind of probably harks back to their superannuation and how long that's been around for. And
the contribution size. You know, it's like for New Zealand, you know, we're 3%. And in Australia it's, you know, do you 11.6.
Do you have a stance on, like, say, the Australian model, which to be honest I really like, and like sort of saving people from themselves in retirement, making sure they're well set up. What are your thoughts on Kiwi Saver in terms of it's not compulsory 3% level contributions? Do you think that changes should happen there?
Yeah, I think Kiwi Saver is an amazing tool to set people up for retirement. I think there's so much about it around like how, you know, so much around like the system of it, of that it's just small, you know, part of your pay every week, and it builds up over time. The idea that it, you know, goes with you through your life. I think there's definitely elements of the design of it. The analogy that I have been thinking about this is like, it's like following a marathon training plan, and then getting to race day and realizing the plan you were following isn't going to actually get you across the line. It's like, it wasn't, and I think the contributions aren't going to be enough to get people to where they need to be to retire. So, but I think that people think if I've got Kiwi Saver, I'm sweet. And I think that there's a gap there. And I think the whole idea around compulsory, we are leaving people behind. And it's typically people who know about the value of investing and how that can happen over time that will educate people to get into Kiwi Saver and support. Because I know that my first payday, I was like, showed up. They gave me the Kiwi Saver form when it first came out. And I was like, what's this? And like, oh, so we'll put away 3% of your pay. And I'm like, okay, nope.
Thanks, but yeah.
And it's like,
I'll take the 3% of my $50,000. Thank you.
I love that.
Yeah.
Sounds like I'll need that money. And I think that's the thing. I think if someone, you know, took the time to explain that the value of that dollar or that value of that 3% over time, which is eventually what happened. And then I did get Kiwi Saver, and I'm really stoked that I have Kiwi Saver. But again, it's like, how do we,
The terrifying thing is there are like tens of thousands of Sonyas at that point in time that are like, nope. And
no one gives them a wake-up call.
There's, I mean, we did an episode on retirement planning the other day, and TV1 did something 18 months ago about like poverty in retirement, and it's just so
heartbreaking.
Sad. And that's what Kiwi Saver is, you know, trying to be part of fixing. But you're right, it's not enough by itself.
And I mean, you know, I think that talking about increasing contributions when there's a cost of living crisis as well is not something to, you know, I think it's important to talk about the shift that happened in Australia taking a really long time.
That's right.
And you know, it's not an overnight, hey, we're we think that
we're going to bump this up to 12% basically. It'd be a hard sell.
Government wouldn't react like that anyway. But if you're just asking, I think that that's something that would make it, that is a gap that we have, and that is a potential, way of solving it.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
I want to talk about, so Sharesies is obviously part of the role is to facilitate access to the markets. But there's almost I feel like Sharesies' brand is as much tied to education as it is about facilitating a solution. Within Sharesies, how much is there the focus on the education part?
Yeah, I think heaps. Because our mission is to create financial empowerment for everyone. And when you think about empowerment, it's what that means will inspire something different for everyone. But I think it's a level of confidence and control and choice around what you're doing in your future and feeling like you can really live the life you choose. Mm-hmm. And so I think if we had just focused on the platform itself and the technical aspect, I think that's not the biggest problem to solve. It is a huge problem around solving access and things like that. But alongside that is also the kind of cultural change or the preparedness that people need to feel, that confidence that I can, we talk about it access and aspiration. It's you need, access is one thing, but you also then need to feel like you can change something about your life, and that's going to be what makes you think that you can invest some time into this and that it is going to get you where you need to go.
Yeah, I mean, Dave Ramsey's in the States talk about 20% is knowledge and 80% behavior, right? And it's a combo of the two. So how?
Just on that though, I think that one thing we did talk about is our goal is not that someone comes to Sharesies and educate. That we educate people. It's that we just, one of the things was we want people to feel smarter every time they use Sharesies, or every time they engage with us, they just feel a little bit smarter. Where it's the outcome is that they know more, not that they have to have gone through every module, or, because sometimes you can do that stuff, but you don't actually, it doesn't correspond to how you feel about things or what your actual level of smartness. So we try to do learn by doing and just integrate as much as possible around that stuff too.
And what's the view around, so obviously there's people who will build their own portfolios with direct stocks and be managing their own thing and know what they're doing, but to a big extent the being able to pick your own directs, especially if you lack education, results in a huge amount of risk to the individual over time versus maybe picking funds. How do you educate people on you have to give access, but also you've kind of got to be how do you teach people what is the right thing for them to be exploring?
And what's the appropriate level of risk?
Yeah, definitely. I think we do write a lot about that, but as well we have risk indicators within our product where people can understand what is that proportion of diversification, because diversification is just a risk management tool. And so most of our investors have a range of investments. It's very rare that someone is just but again, we don't see what other investments they have outside of Sharesies. But we do encourage that diversification, and we see that play out in our numbers. Yeah.
So we've talked a lot about where we started, how we got here, some of the challenges, and then obviously what the platform is doing now. You've recently acquired Orchestra. You mentioned an insurance product before. I definitely know there was a deal on the table that's just been executed with Fonterra. What's going on at the moment that's exciting in the Sharesies world, and what's next?
Yeah, so heaps is going on.
Yeah,
in the Sharesies world.
I'm just doing, Michael, every single day. What do you mean?
I woke up, I'm here.
Yeah. And then I move into Australia.
But I think it's an interesting, when you talk about how people know Sharesies and what people know Sharesies for, I think people do really know us as a an investing platform for people to start investing and to grow their portfolios. But around 2 years ago, really saw this opportunity to start working with companies to help them better engage with their shareholders. So if you think of, on the one hand, you've got people who want to invest. We also want businesses care that those shareholders are having and getting information that they need, making great investment choices, and are know what they need to know to be able to inject capital into their businesses. So we have been working with businesses over the last 2 years. It started with working with listed companies around how they can better communicate with their shareholders that hold shares on Sharesies.
Yep.
And so we built a product around that. And then we also support businesses with their capital raising, as well as a big opportunity and one that we're growing is the staff shares. So actually being able to reward your team for all their work with shares in companies. And what we've seen is business, that's not a new idea. Businesses do that and have rewarded their shares through broad-based share schemes, but it's around that engagement or the adoption or the understanding of what that is. And that is something that we've really honed our skill in over the last 7 years. And so, and I know for me, that's how I got my first investments, was through a staff shares scheme.
Yes.
And it's such an awesome entry, into shares.
Yeah. I remember getting the contract when I first did it, and I was like, you what? I was like, you're just going to give me that? Yeah. But then you have all these questions. You're like, What is vesting? What is the lockout period? What does all this mean? Yeah.
This is it, isn't it? So it's on the one hand, you've got something that is valuable to a company to give away, is valuable to the person, but somewhere along the lines, it's really hard to bring that value to life. And so that's what we've been working with companies to do, is because some companies have given away shares, but their adoption rates are so low on it because people, even though it can be part of a package or a part of shares that are being given away. So that's a big opportunity there, and we've been working with businesses to do that. And then broadening that is some of those problems around what listed companies go through are also problems that privately owned companies go through. And so when you mentioned, we recently purchased Orchestra, and so Orchestra help you manage your shareholders, and we've been a customer of Orchestra since we started, pretty much, or since we needed to kind of come up with a way of managing our shareholders. And what that does is it means we can really support better shareholder relationships with whether you're private or publicly listed, and that just creates better shareholder experiences for companies and for investors. And then the Fonterra piece is support partnering with Fonterra to do their farmer trading platform, and so that the farmers that are trading their shares in the co-op can do that. We're the platform that does that.
It sounded like when you said farmer trading platform, you just trade farmers. No, this guy's down at the moment. He's not that great. We'll sub him out for another guy.
How the legacy, because obviously farms have been around for a long time. The legacy problems by taking that on, Sharesies is a tech company, while you've got a very an industry that has been doing what they've been doing for a long period of time. That must be fascinating.
Yeah, it's, what am I trying to say there? It's it is just taking that technology and applying it to a new way. And I think, they have been doing that. That has been operating, and they have been using a platform to do that. I think the element that was interesting, to them and where they wanted to really move with it is that farmer experience. How do they provide the best experience for their farmers to be able to interact? And so that's why they chose us. And we've been building that with them for the last wee while.
Yeah, cool.
Yeah.
And then what's the insurance product you were talking about?
Yeah, so Sharesies has really made a shift over the last wee while to go from just the investing product into the your entire wealth picture. So we've launched a Kiwi Saver and a savings account. But the other thing that can get in the way of wealth in building wealth is the unexpected stuff that pops up. So part of that is how do you actually protect your wealth, and how do you smooth out those bumps along the way? So we are launching a car insurance product soon, and that's just around, how do we continue to help people protect their wealth and get visibility that they need, so they know they can get that peace of mind.
Yeah, it's an interesting one, because we often talk to people about insurances, and it's all great talking about the fun stuff, the buying the shares, the investment properties. The safety net underneath is actually what matters as well, and just people trying to get people engaged in that conversation can be quite difficult.
Yeah. It's like 50% of people have a will, right? And if you don't have a will, you should have a will.
Who's got a will in this room?
Yeah.
I will.
Yeah. I like to say like insurance and wills, you've got like a list of 1 to 10 things to do. Yeah. And insurance is number 10. You do 1 to 9 and then you fill it back up with more important stuff. But that's because like when it comes to insurance and when it comes to wills, right, you need to do them, but they're not important until they're really, really important.
Yeah.
And then it's too late.
Yeah. Okay, so you've added on from an idea to 6 ETFs to building on savings products, managing this big team. The way you talk about impacting businesses and the communication and the experience and insurance. What's the end goal for Sharesies? Where do we want to be long term?
Yeah, I think definitely it comes back to that mission of creating financial empowerment. And I think we just kind of come up with the best way that we think we can impact that at the time. And, we talk about, why we started with investing and that was one of the biggest barriers. And now actually, the ability to unlock potential by connecting companies and shareholders and making that relationship closer is going to drive so much impact for economies, because then you've got more money kind of flowing into productive assets.
Yeah.
Because I think
property's not that productive.
Well, and
says the mortgage broker.
It's not.
No, but it is like the thing with property is it's not just an investment asset. It is like a lifestyle. Asset too. But when you think of the New Zealand economy, it's like the balance of property versus capital markets is the opposite of other countries where they have way more money into capital markets and less into property.
Yeah.
And so we've got some room to grow there, and we're really keen to support that growth and think that it will have a really huge impact for Kiwis.
Yeah. And I also think, if you're going, there was periods of time where New Zealand at the moment, if you compare our like GDP per capita to other countries, if you look at, being compared to like as a rock star economy in the past, like being innovative, like a big part of like those periods of times, if we want to return to them, is like, where is the capital going? And to your point, if capital just sits in property, well, then some people will get rich, and certainly everybody needs somewhere to live. But like, if we're wanting to, make New Zealand, better, grow, create opportunities, increase employment rates, build better hospitals and schools and all that kind of stuff. I mean, it's quite cool to think about Sharesies' responsibility within that, right? Like getting the average Kiwi's money into more productive assets.
Yeah, and I think that you touch on it, where it's like, where does that money flow? It flows into better life, all those infrastructure elements and improving those.
Yeah,
that make a difference to all of us every day.
Yes. So Sonya, you've built, been part of building something really cool. There's lots of people listening, and a lot of people we talk to who do have aspirations to do something greater and do something bigger. What would your, if you had one piece of advice you could give people listening who maybe think of, going on that journey of building something, what a piece of advice would you give, apart from wake up in the morning and do something?
Yeah. Well, I mean, that's probably it. But the other side is like, I think that imagination is underrated, and where it's like when you can actually imagine something better. And I think that's part of where something starts, is it's like just going, what would change this, and letting yourself think about some of those possibilities that sit in there, and then just doing something towards that every day. But I think as well, when I reflect on our experience, I definitely think like there was so much that played into it, but that team, getting great people around you. And that's been like one of the things that I think that goes to, where we are now with our great the team. We've always been supported by a fantastic board, but also in how we operate with others. It's like just realizing that we're all people trying to make a change. And, I think we have that attitude towards competitors too, where it's like we probably see the shared goal more than we see the competition.
Yeah.
And I think that's an element that I would take away, is like working out who cares about this problem as much as you do, and just like hang out with them.
Yeah.
And there can be like some real momentum that builds from that.
Awesome. Okay, Sonya. Well, thank you very much for joining us. Good luck with the move to Sydney on Monday.
Yeah.
Please make sure to subscribe, review the podcast. Much love to Partners Life for sponsoring us, and we'll see you next time.
Cheers.